Tired of dropping your phone or struggling to prop it up? Meet the PopSockets phone grip with expanding kickstand in black, your new must-have accessory. Don't miss out. Grab yours today. Click the link in the video description to shop now on Amazon.
What's cooking in the music industry? Well, let me tell you, it looks like we've got a great week for music stocks. We're talking about 5 consecutive weeks of gains, and that's a pretty big deal. Now, I know what you might be thinking, what's behind the surge? And that's exactly what we want to dive into today. First off, let's take a look at Sphere Entertainment Co. These guys have been on fire lately, with shares jumping 18.9% to $28.05 after their quarterly earnings report showed that cost management helped offset a decline in revenue. And the CEO, James Dolan, is feeling pretty confident about the future. He says when it comes to concerts, demand exceeds capacity, so they've got room to absorb any issues. That's music to our ears. Now, MSG Entertainment is another company in the Dolan family portfolio that's seeing some big gains. Their quarterly earnings report showed a 6% revenue increase and steady consumer spending, despite a decrease in event-related revenue due to fewer events. And get this, JP Morgan still thinks they're a neutral investment with a $41 price target. That's some serious backing. But what about the broader market? The SeriesChirp Global Music Index is up 0.8% to 2,717.17, its second highest mark since February. And it's not just music stocks doing well, we've also got radio companies enjoying a positive week amidst uncertainty about the U.S. advertising market. iHeartMedia, for example, jumped 18.9% after their first quarter earnings release. That's some serious momentum. Of course, not everything is rosy in the world of music stocks. Universal Music Group had a bit of a bounce this week, gaining 4.5% to $29.10. But Warner Music Group? Well, they didn't fare so well. Their quarterly earnings report showed a decline in streaming revenue, which took their year-to-date loss to 11.8%. That's not exactly music to our ears. And then there are the K-pop companies. YG Entertainment spiked 9.9% after reporting large increases in operating income and net profit. But HYBE and SM Entertainment had more mixed results, with HYBE rising just 2.1% and SM Entertainment falling 0.9%. JYP Entertainment wasn't far behind. Finally, let's talk about Vivid Seats, the secondary ticketing marketplace that fell 33.9% to $1.79 after their first quarter revenue plummeted 14% due to softening industry trends amidst economic uncertainty. That's some pretty tough news. So there you have it, a mixed bag of music stocks this week. But one thing is for sure, 5 consecutive weeks in the black for the SeriesChirp Global Music Index is something to be celebrated. Stay tuned for more updates on the music industry, and don't forget to subscribe to SeriesChirp for all your music stock news needs.